Welcome back to the show. Today we're diving into something that doesn't get talked about enough, even though it can move markets faster than any chart, any whale wallet, or any exchange listing. And today, it hit XRP harder than almost anything else on the board. We're talking about social sentiment, the return of fear, the way narratives flip overnight, and how a community-driven asset like XRP can rise or fall purely based on emotion before fundamentals even enter the conversation. Because what happened today wasn't caused by new filings, new lawsuits, new institutional flows, or new liquidity injections. It was caused by a shift in mood, a sudden wave of negative commentary, and a market that was already sitting on edge. So let's break down exactly what's going on, why it matters, and what this has meant historically for XRP. Because this kind of move, as painful as it looks on the surface, has actually been the precursor to some of the strongest rebounds the asset has seen over the last couple of years. XRP began the day hovering comfortably enough around that $2 region. Not explosive, not collapsing, just stable, which in the current environment is a win by itself. But then the mood shifted. And what's interesting here is that the price didn't lead the sentiment. The sentiment led the price. On-chain data and real-time social scanners picked up a sudden shift on X, Reddit, and Telegram channels, where mentions of XRP turned heavily negative in just a few hours. It wasn't one big piece of news. It wasn't a new SEC filing or a regulatory bombshell. It was more like a wave rolling through the community. People started expressing fear about Bitcoin losing momentum. Others panicked about altcoins underperforming. Some simply repeated the same bearish lines that echo through every cooldown phase. XRP is slow, XRP is lagging, XRP isn't moving, XRP is dead. And what's fascinating is that none of those statements were based on new data. But markets don't always move on data. They move on belief. They move on expectation. They move on what the crowd thinks. And once that feedback loop begins, especially in low liquidity environments, it becomes a self-fulfilling prophecy. People talk bearish, others hear the bearish talk, they assume something must be wrong, they get defensive, and the selling pressure builds. That's exactly what we saw today. XRP slid back down to around $2.03, not because of structural weakness, but because the community mood dipped and the market followed. But here's the twist. And this is why this deep dive matters. Historically, when XRP sentiment collapses into a fear zone without a major fundamental catalyst behind it, the asset often experiences a sharp rebound shortly after. We saw this in early 2024, again in late 2022, and even during brief sentiment dips in previous cycles. XRP is one of the few major altcoins where the retail base is so strong, so vocal, and so reactive that sentiment isn't just a metric, it's a momentum engine. When the crowd turns negative, the price slides. But when the crowd realizes the negativity wasn't based on anything concrete, it flips back the other way almost as fast. And that's because XRP doesn't trade purely on fundamentals or speculative narratives. It trades on belief. Belief in the long-term story. Belief in the Ripple ecosystem expanding globally. Belief in institutional adoption. And belief in XRP's role in payments. Even traders outside of the XRP community use it as a kind of market barometer. When XRP falls too quickly, it is often overdone. When XRP rises, it often outperforms expectations. So the fear we saw today isn't unusual. In fact, it's part of the XRP cycle, one that repeats itself almost rhythmically in these periods, where Bitcoin is stuck in indecision, and the rest of the market doesn't know which direction to trust. Now, what actually triggers these sentiment crashes? Let's break this down, because it's not random. The first trigger is uncertainty in Bitcoin. When Bitcoin sits under a psychological level like 90,000, people start panicking. Not because anything is fundamentally broken, but because traders hate uncertainty more than they hate losses. If Bitcoin isn't showing leadership, altcoin traders begin projecting their frustration onto whichever asset is nearest them emotionally. And XRP is often the lightning rod. The second trigger is the state of the liquidity. When there isn't much volume on the books, it only takes a small swarm of negative sentiment to cause outsized price moves. Today's XRP dip was actually a very small amount of net sell pressure, but because liquidity is thin, those small sells create big candles. And once you see the big candle, sentiment worsens again. It's a loop. The third trigger is fear contagion. Traders see Bitcoin wobble. They fear everything else will wobble. So they sell before they think someone else will. You see this especially with newer traders who joined during the recent rallies. They don't have the long-term conviction yet. They just see red candles and think, get out. But here's where things get interesting. This type of sentiment-based decline is often the best possible setup for a short-term reversal. And let me explain why. When an asset falls because of real structural issues, a lawsuit, regulatory blowback, liquidity withdrawal, exchange delisting, those moves take time to repair. But when an asset falls because of crowd psychology in a weak market, the recovery is often as fast as the decline. The same way fear spreads quickly, relief spreads quickly too. And this brings us to a bigger conversation: how sentiment indicators are becoming more powerful than ever in crypto. Traditional markets don't move like this. Stocks don't usually react to mood, unless that mood is backed by earnings or interest rates. But crypto is a hybrid market, part fundamental, part technical, part psychological. Social sentiment now acts like a leading indicator for price action, especially on coins with strong communities. XRP, Dogecoin, Solana, Cardano, all of them respond dramatically to shifts in emotion. The new generation of sentiment scanners, those AI-driven tools that scrape millions of posts per hour, have become some of the most important early warning signals in modern trading. And today, they were screaming. They detected fear before the chart showed it, and once the chart reflected it, late traders piled in on the decline. Let's zoom in on the psychology behind this. When XRP sentiment collapses, it isn't because people think the project is failing. It's because people believe other people are scared, and nobody wants to be the one holding the bag if a bigger drop happens. This is Keynes's beauty contest theory in real time. Traders aren't betting on what they think the market will do. They're betting on what they think everyone else thinks the market will do. And when everyone thinks everyone else is scared, fear wins. But there's another layer here. The XRP community has one of the strongest long-term belief systems in crypto, and that belief acts like a coil. When sentiment dips sharply, it compresses that coil. And when conditions improve even slightly, Bitcoin stabilizing, news calming, liquidity flowing back in, the coil releases, often violently to the upside. Now, midway through the episode, let's take a quick moment to thank our supporters. If you're holding XRP, if you're watching Bitcoin closely tonight, or if you're just trying to navigate this insane market with a bit more clarity, then this show is for you. And if you're enjoying these deep dives, if they help you understand the market in a calmer, more structured way, take a moment to rate the podcast 5 stars. It genuinely helps more than you realize. And of course, don't forget our XRP giveaway. 10 XRP to the best comment of the week, and 5 XRP to a random listener. Drop a comment with your thoughts on today's episode. Does sentiment matter more than charts right now? Do you think this dip is the beginning of something bigger, or just noise? I want to hear what you think, because this community's insights shape the direction of the show. Now, let's zoom out even further and ask the bigger question. What does this sentiment collapse tell us about the broader market? Because this isn't just an XRP story. This is a sign of how sensitive the entire crypto landscape is right now. When markets are strong, negative sentiment doesn't cause price crashes. When markets are weak, even mild negativity can trigger dramatic moves. Today was a reminder that we're in a fragile environment where price moves aren't always logical. They're emotional. This is why traders who rely only on charts often miss the early signals. Technical analysis tells you where price has been. Sentiment analysis tells you where price might go next. And right now, sentiment is the more important tool. You could see the mood turning hours before the price reacted. And that's where the alpha is in markets like this, understanding that traders are humans before they are investors. But let's talk about what usually follows. After fear spikes, it typically burns out quickly. Markets cannot stay in a state of extreme emotion for long. People get tired of negativity. Bargain hunters step in. Whales accumulate. Market makers re-add liquidity. And slowly, sentiment turns. It doesn't take much. One stabilizing Bitcoin candle, one good headline, one positive analyst comment, and the fear begins to unwind. If you study XRP's history, you'll see the same pattern repeated again and again. Sharp sentiment drops followed by powerful recovery waves. It doesn't guarantee anything. Nothing in crypto does. But it tells us that today's decline is not necessarily a sign of deeper structural weakness. As we come to a close, let's leave you with a thought. Sentiment is not the enemy. It's a signal. Fear isn't a threat. It's information. And when you understand how fear forms, spreads, and eventually collapses, you get an edge over traders who are reacting emotionally instead of thinking clearly. Thank you for listening. Drop your thoughts in the comments, rate the show 5 stars, enter the XRP giveaway, and let me know. Do you think today's fear was justified, or do you think the market overreacted? I'm curious to hear your take. And as always, we'll see you at the top.